Yeah. And then going into the 2008 recession, you're still very, really young, in mid 20s,
Yeah.
and you're going through probably one of the greatest financial collapses of
Yeah.
recent history. How
Right.
was that for you, and what kind of challenges did you face during that time?
It was mentally tough. I mean, you're a new landlord, you're relatively young. I'm 20, 24, 25. I'm being challenged because I'm young already. I'm being challenged because I don't know the rental business. So it was a huge learning curve. But again, I no regrets whatsoever. It forced me to be patient. It forced me to. I think when new investors come in, and let's say a new investor, and I'm not. This is not to criticize anybody. Let's say you came in the business in 2015. You're on a roller coaster ride, right? I mean, you're just the market's sky, and you start to do things that you wouldn't normally do because it just seems like you can't lose. Every year, the properties are 6 to 7% higher, especially here in Boston. Rents are skyrocketing. 2018, 2019, things are just going really well. For me, because I started off in a bad economic climate, it made me a more conservative, more awareful investor right from the start. I look at numbers, I crunch numbers a little bit tougher. I know that I make my money going in. And as a real estate agent, I talk to a lot of investors as well, or broker, and a lot of people kind of blew my mind. This girl came into our office maybe several years ago, and she actually was moving out to your area. She said, "Hey, I'm moving out to the Bay Area in a couple of years or a year or so, but I'm going to buy a property here in Boston, and then I'm going to sell it. And the goal is to buy it for 700,000 or condo, and then I'm going to sell it for 800,000 when I leave in a year." And I was like, "What? That's not an investment. Where do you get those numbers from?" But that's where the market was, right? It wasn't an investment anymore. It was strictly speculation because everyone was doing so well and things were doing so well. So again, going back to starting off in 2008, 2009, those early years, it made me a better investor. It made me look at the numbers a little bit more carefully. It made me crunch the numbers a little bit better, and kind of go into things that make financial sense for the long haul, right? Anything that I'm buying, and even in 2020, I'm looking at it as this is not an appreciation play. This is something that's going to financially make sense, whether it be 2020 or even if we take a 15 to 20% dip. I'm still going to be collecting the same amount of rents, and the cash flow performance of the property is still going to be the same regardless.